Right, hi, welcome to our update for end of May, and it is for the FSM Managed Portfolios. This is the structure of our presentation. I'll give you a quick review of the performance of the markets. I'll give you a review of the portfolios as well. Some statistics of our portfolios since inception and since year to date. You can see the performance of our portfolios versus the other multi-asset peers on our platform. I'll talk about markets and what we're doing going forward. Okay, so if you look at the performance of our portfolios over the year-to-date period and month-to-date, I think year-to-date the performance has been quite positive for most markets and for risk assets in general. But over the period of May, there was a pullback in markets. There was a sell-off following President Trump's tweet on the progress of the trade deal, which is actually a lack of progress with the trade deal on the American front against with China. Okay, and if you look at bond markets, actually they actually benefited a little bit in the month of May as compared to the equity counterparts. And it's actually more in the safer bond market segments. You look at the next slide over here, if you see the performance since inception, the portfolios have actually been quite strong. Performance-wise since inception is about 14% for the aggressive portfolios, all the way to about 5.2 to 6% for the conservative portfolios. Year to date, the performance is about 8% for aggressive and conservative is about 5%. Relative to our benchmark, we have underperformed because the benchmark that we use is actually mostly towards the global equity and global bond markets, where they're actually more exposed to the developed markets. So developed markets equity and developed markets fixed income markets. Whereas for our asset allocation, we are most of you should already know, we are already more positioned towards emerging markets and Asia, where we use a GDP weighted kind of approach. So that of course means that we are less exposed to the developed markets, particularly the US markets, and that means that if those markets actually perform well, then we will actually underperform our benchmark. Okay. So if you look at the next slide, this is the index performance. The next three slides will also be the performance of our portfolios against all the other multi-asset funds out there, especially those that are on platform that we distribute as well. So in terms of portfolio actions, I think some of you already know that in January, I added 3 ETFs in the aggressive portfolios for both growth and income. For March, we actually changed the product allocation because of the quota being maxed out for that particular X product. Okay, so we switched to this fund over here. Okay, for April, we actually did a rebalancing and we changed the neutral allocation for Asian IG bonds. Okay, so going forward, currently this is our asset allocation. So we are overweight equities vis-a-vis fixed income by 500 basis points across the portfolios, except for aggressive. Aggressive, we maintain 90% equities and 10% fixed income. If you look at the other portfolios, they are all overweight equities vis-a-vis fixed income by 500 basis points. So this is our current positioning from a geographic standpoint. We are underweight the US, overweight Asia, overweight EMs, and in fixed income, we are actually somewhat neutral on some of the safer segments. We are overweight EMD because we like the area. We are also overweight Asian high yield because we think that the coupons there are quite attractive and investors should actually clip it. Okay. The event that's probably on everybody's mind now. We are actually looking at 3 scenarios on this.